Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Ridham Desai of Morgan Stanley believes that India is on a growth recovery path, which will translate into better earnings. In an exclusive conversation with CNBC-TV18 earlier this morning, he says stocks will move higher over the next 1 to 2 years.
The bull market is now reaching a stage where it is going to get backed by strong fundamentals. Now, obviously, there are a lot of risks along the way, and I think everybody is focused on those risks. Which is usually a good time to actually engage in stocks. When people start disregarding risk, that's when I think you get worried. But for now, I think growth is looking good, likely to surprise on the upside. The profit share in GDP is at near all-time lows. So I think we're going to likely witness a very sharp recovery in corporate profit margins over the next 2 or 3 years. Let us step back for a moment and think about exactly 12 months ago. If somebody had told you that the rupee will be at 72, 73, that oil will be where it is right now, that the 10-year will be at 8.2, that we will have all this tariff stuff happening around the world, what do you think you would have done with stocks? And that's the point, right? All this is already in the bag. It's already in the bag. We already know about this. The market doesn't feel like that right now. It doesn't feel like it's in panic or it's an exuberance. So I would argue that stock prices are more accurately reflecting all these concerns than we can actually fathom. It's very hard to tell how things will pan out with respect to elections. What our historical analysis shows is that it's not the nature of the government, but it's actually the leadership at the top that matters to the economy and therefore to the markets. So we've had fragmented coalition governments in the past, and that's had no impact on stock returns because the economy has done okay. And on other occasions, we have had reasonably strong governments, but poor leadership, and that's hurt the markets. It's not about what actually happens in May next year, but what the market starts believing will happen. And that is ultimately what's going to drive share prices over the next few months.